I'm Oliver Sloup with Blue Line Futures, come to you from the Chicago Board of Trade with another episode of Tech Talk. Today we're taking a look at the grain markets, more specifically corn, soybeans, and wheat, and we've really seen the volatility pick up quite a bit, and it started with that Sunday night session when we got that gap higher. The caution flag for us, though, and we mentioned it in our morning report on Monday morning, was the fact that we weren't able to get any follow-through momentum Sunday night or into Monday morning, knowing that it was also the end of the month was an additional caution flag. Funds have had a very large net long position, weren't able to get follow through in the overnight, so potentially some position squaring, and that's exactly what we got on Monday, and we saw some follow through on that yesterday and again in the overnight and early morning session today. Now corn was able to stabilize here after holding technical support, which we had listed as 408 3/4, 413.5. That is a 4-star level for us, and as mentioned in this morning's report, now if you're bullish, this is the pocket to be buying into, and if you've been bearish and been short, this is a spot to lighten up. So we didn't get down there exactly, but trading's an art, not a science, and I think we got close enough where we started working with clients on buying back some short positions. Got a rally here, and we're potentially looking to resell if we are not able to get back out above this pivot pocket with consecutive closes with some conviction. So 422.25 is going to be, I think, a pivotal line in the sand going into the back half of this week's trade. Now moving over to the soybean market, as mentioned kind of in the opening, we moved to outright bearish on Monday morning. We're outright bearish yesterday, and this morning walked it back to neutral bearish after coming down and testing and holding technical support, 1138 and 1142.5. A lot of these areas got triggered in the overnight session. This was previous support after the secondary breakout point on November the 10th. So that's going to be the line in the sand, 1140, give or take a few pennies. A break and close below there, I think, takes us to retest this trend line. It'll probably be coming in closer to 1120. Now, does that mean the top is in for these grain markets? I don't necessarily think that that's going to be the case. We always say the top is a process, not necessarily a point. Potentially we started that process, but it's going to be one of those things where hindsight is always 20/20. So I think, as mentioned with corn, we're going to be opening up the charts in these markets a little bit more, where you're going to see opportunities on both sides of the market, and we really haven't gotten that for the better part of the last few months. I mean, look at back here, going back to August, it's almost been parabolic. There has been it's been virtually untradeable for people who are looking to be a little bit more nimble. Now we're starting to shake things up a little bit, and I think traders on both sides of the market will be able to have plenty of opportunities here in the not too distant future. So that's what we're looking at for the soybean market. This 1140 area, the line in the sand for the bulls to defend. A break and close below there potentially opens up for additional long liquidation. Obviously, the fundamental side of things, keeping an eye on demand. We haven't seen China show up in the daily export data for the better part of the last 3 months. We've got some beneficial weather in South America as well. So right now the market is a little bit muted. Again, that doesn't mean the top is in just yet. There's a lot of technical support still below the market. Now moving over to and wrapping things up with the wheat market. Wheat really held the overnight session well, considering that the corn and bean markets were getting throttled, and we talked about that in this morning's report. Keep it simple. We don't need 4 paragraphs of fluff. We just talked about, if you're bullish wheat, this is not a bad spot to give it a go. If you've been short, would tell you to consider reducing that exposure to the fact that it wasn't able to break down alongside of corn and soybeans. So we got that rally, and now we're looking to potentially resell, retested this pivot pocket, 596 3/4 to 599. The overall trend is still bearish, as you can see right here. We've been posting lower highs and lower lows for the better part of the last 2 months, so we're looking for that to continue, but potentially a little bit overdone here in the very near term. So looking to resell this area in the mid 590s, which was kind of a secondary breakout point here in October, and it became support and then the breakdown point at the end of last week. We're testing that again here today and potentially tomorrow. Hopefully be able to step back in and be a seller at those levels. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.